Real estate is often considered to be the greatest investment. Most of the multi-generational wealthy families own large amounts of real estate. This is a fact. If you compare real estate to stocks or bonds, for example, perhaps you could argue which asset class has appreciated more over a very long period of time. But with real estate, you actually provide yourself with 4 separate ways to make money, unlike any other asset class. So, what's the deal with real estate? You came here for the truth, so let me unveil that for you. This episode is dedicated to real estate. We're going to talk about the different ways that real estate makes money. I'm going to show you some of the most important details, which are simply not understood by the majority of investors. Typically, people who invest tend to be 100% allocated to paper investments. This is not diversified. I talk about true diversification here on the channel, in my books as well, where I get into full detail, but let's just cover the basics of real estate today. This is from the Money GPS, my book, and I have this chapter specifically focused on real estate. And I talk about the multiple streams of income that real estate provides. So I'll cover that, and then we're going to touch on each of the points. A real estate property provides you with 4 different ways to make money, making real estate investing the most beneficial investment of all asset classes. Those 4 are appreciation, depreciation and taxes, amortization, and passive income. It's important to understand each of these subjects because they benefit you in different ways. Now, having said that, does this mean that real estate is a good purchase right now today? Well, it depends. There are many factors. It depends where you live. It depends how much money you have. It depends what your portfolio currently looks like, and so many other factors. But when the time is right, when the conditions are met, real estate can be extremely profitable, secure, and stable. So let's look at this first. You're seeing price appreciation. Over time, real estate has appreciated in most countries around the world, decade after decade. It's very clear. You're looking at the home price index, and this tells us very clearly that over a long period of time, this particular asset has increased nominally. We've seen it go higher and higher and higher, and this has been the case for such a long period of time. Now, the prices did come down significantly during the housing crisis, and so we've seen them exceed the prices from before in most major cities. But appreciation is actually the least important part of owning real estate. Yet this is what most people are looking at. They are thinking, if I buy my home at this price, I can sell my home at that price and make a profit. Look, real estate is not about appreciation. That is the last thing, because you want to hold it for eternity. You want to be able to hold on to this property for as long as possible until other conditions change, and then you would be able to purchase another property perhaps. Maybe you would want to roll that into a 1031 exchange if you're in the United States. Basically, you can take the profits that you've made on this property, roll it into the next property, and it's tax deferred. Depends on where you live, of course. There are many things you want to do, but if you're making money on an asset, why would you sell it for the most part? That's why appreciation to me doesn't really matter. A lot of people use their homes as ATMs, and I think this is a very big mistake. It only works when prices go up. As soon as prices come down, even a marginal amount, you're sleeping on the streets. This right here is one reason why real estate is good, but let's get into the others. Taxes and depreciation offer you an incredible way to put more money in your pocket. This article happens to be from a Canadian website, but usually these same type of factors apply to you in other countries as well. Rental expenses you can deduct. So if you have not a personal residence, but a rental property, there are so many things that you can do to get more money back into your pocket, all right? You're looking at writing off advertising, insurance, interest, any of your professional fees, your repairs and maintenance, office expenses, prepaid expenses, property taxes, your utilities and travel, and so on. What other business would offer you this many benefits? Okay, that's just some of the things. Think about all of the little expenses you may incur in real estate. All of that is something that you can deduct. That's going to be deducting off the profit, which is still coming in, but now you're able to write off all of these different things. It's incredible. You have the ability to write off the depreciation on the household. Can you write off the depreciation on your bonds? Can you do that on your Amazon stock? Probably not. So let's look at the next one. Amortization. This is incredible. Imagine you have a 25-year mortgage and the entire 25 years someone else is paying the debt. It's unlike any other asset. What kind of asset do you know that somebody else will pay it for you? It's unbelievable. Now, of course, you have to use leverage. It has to be done at the right time. There's so many details. It's not as easy as somebody else paying your bills, but the point is made. Real estate offers so many options that the other asset classes don't. So when the time is right, you could be sitting on a money printing machine. And that brings me to my next point. Passive income. Imagine you have a property. Every single month, it brings money into you. Even if it's only $100. You're going to be getting $100 every single month as long as there's a renter in that unit. If you pass away, the person who takes on your rental property will then get that $100 a month. It continues forever. As long as that property has a person living in it, it's going to bring in income. Passive income is the ultimate way to be successful. You have to create streams of income that are passive, that are there when you are not. Or else you're always trading time for dollars. And this is a finite process. If you find yourself in a situation where you're not so fortunate, maybe you get sick, maybe you get injured, you can't work anymore. Where's the money coming from? Well, that's when we have our passive income strategies to be able to bring the money in to pay the expenses. And of course, if you can accumulate a few of these over your lifetime, suddenly all of your expenses can be paid without you doing anything. And then you can choose what you want to do with your time. Now, that doesn't mean that real estate doesn't involve work. It's not as if you see in this picture, you lie down, have a martini, and watch the money flow in. But certainly, you don't need to be present on a daily basis, 8 hours a day, in order to get that paycheck at the end of the month. That's the difference. And the last thing I want to touch on is this. One of the most important factors related to real estate is interest. If interest rates are very low, you can magnify your gains. If interest rates are too high, then it becomes difficult to get that property which you desire. In this case here, they're just showing, for example, from 3.5% interest rates to 4.5% interest rates. That makes a difference of $100 a month in this example. And that's only a $200,000 home loan. So if we double that, certainly you're going to see it's a much bigger difference. What's important to know about real estate as it pertains to the interest rate portion is that if the money you're bringing in is more than the debt payments, then it can be a good investment. Think about it for a second. You're borrowing at, let's say, 3.5%. And the money you're making on the property is 6%. You pocket the difference. They are basically paying for your asset. It's incredible to think about, and it all is dependent on this debt. Now, you have to be able to manage it, and you have to understand that fixed interest rate is very important because you want to know how it's going to be over the term and not taking too much risk because you're using leverage. So in this case here, it can really destroy you if you're not smart about that. We learned about the problems of real estate in the housing crisis. So just to finish the video off, I wanted to let you know that there are 4 basic asset classes. I talk about this in my book and in my videos as well. But essentially, we have real estate. We have precious metals and commodities. We have paper assets like stocks and bonds. And we have the forgotten asset, business. Each one of these has pros and cons. Each one of these has benefits and advantages. You may desire one over the other, but all of them are required to have a fully diversified portfolio. You may not want real estate today. You may say, real estate in my city is too expensive, it's ridiculous, I simply can't afford it. So it might not be the right time to get into real estate, but there will be a time in which it becomes undervalued, and that might be the right moment to get in. There's always one asset class that is undervalued at any given moment. Also, you have to think maybe the real estate or maybe the asset I'm looking for isn't available in my city, but it's good in another part of the country or of the world. That's also a factor. So I'm going to end the video there. I just wanted to let you know, if you wanted more videos like this that are not like my normal daily news videos, then head over to my channel, scroll down to the bottom, and you get these two playlists, How To and Solutions and the Easy E-Course. Check them out for some more data like this video you've just watched. If you want the financial education you were not taught in school, these two books have everything you need, from the foundation and the history and the asset classes about real estate, how to make money from it, all of the asset classes. In fact, check out these two books. The link is in the description. If you want the audiobook version, it's at themoneygps.com.